Good morning and welcome to the 194th, or probably 195th, I've lost count, edition of Talking Bull. My name's Ian Coleman. I'm here with my friend and colleague Steve O'Hare. Good morning, Steve.
Good morning. Good morning, all. A fine day in the markets yesterday, followed by a little bit of fineness starting this morning.
Yeah, I've got some really interesting levels today. So it's not going to be boring, as that guy said yesterday.
Yeah,
it's going to get everybody on the edge of their seats and thinking, "Fuck me, do I need to get in on this, or do I want to wait a little bit longer?"
That sounds exciting.
It is very exciting, and I'm also very excited because Joe's back tomorrow, and he's going to spend about a day mending out all my fuck ups from the spreadsheet and everything else that I've done this week to mess him about. So, plus the P&L might look a little bit better on the Talking Bull because we both got smashed yesterday.
Yeah, mine at a day.
Definitely mine at a day. It's quite interesting, actually. I'm going to talk about that Bitcoin in a bit. Because we've actually got long this morning at the market. And we were mentioning how difficult it was with Talking Bull when we sort of obviously our system, if you like, is to pick support and resistance levels that are prime and collide or have confluence with other support and resistance levels. And obviously, a lot of the time when we're doing Talking Bull at 8:30 or 8:45 in the morning, it's quite away from our levels. And that Bitcoin basically came down and triggered our long trade this morning and is now nicely on side. So it is a struggle with, I think, with a gun to the head sometimes. But anyway, stop waffling, Coleman. What are you looking at?
Being boring.
I'm being boring again. They're all waiting for this fucking astronomical levels that I've got that are going to just turn the market. But I'm going to let you go first.
You.
But I'm gonna talk about dollar.
Okay.
So I want to see what you're going to talk about silver and gold first.
Yeah. Okay. All right. You throw me in front of the bus now. So gold was interesting yesterday because really on a daily chart it still looks okay. It looks positive. It looks like it's recovering. It got above the $2,000 level, and in the afternoon, slam dunk the funk 4-hour chart posted this hanging man candle. Prices have since then been bearish, and I think it may continue into today.
That lines up with my story.
Yeah, good.
I like
that. So yeah,
FOMC tonight as well.
Yeah. So and again, if you look at the silver 4-hour chart, hanging man candle, and we're breaking below the bullish channel. The supporting the support line on the bullish channel. So I'm looking to buy a dip lower in silver, but I'm happy to go with the flow on the gold and sell a break of yesterday's low. You can see momentum's stalling, and we've got that to look at. Also stocks as well sort of had a little bit of a yesterday. Looked like they were going to sell off and everyone was getting a little bit nervous, and then they rallied back into the close, and then overnight they're selling off again. So I think,
what's your general thought? Do you think they would do a decent correction?
We are due a decent correction, but that correction could happen 6 months from now. That's my thought on it. I think if everyone's sitting there waiting for the correction, it's not going to happen. It's when people sort of forget about the correction and are not concerned about that and start to buy into the sort of like the new highs and we get a bit of acceleration higher, and we haven't had that yet. So I think for us to get a decent correction would require some sort of news bomb. And I think there's a lot.
Trump's pissing off China again, isn't he?
Yeah, and I think that gets easily absorbed. We get the sell off, and then people buy it back. So I think there's still a lot of support out there from the central banks. That's not gone away, and we've got to just accept that the markets are going to be like this during August, especially when everyone's away on holiday or not. They're all locked up at home on holiday, but people aren't working. People have down tools. Especially a lot of the bigger traders and banks have sort of like not got a lot of interest. They've sort of like all flat and square and waiting for September maybe.
Yeah. Well, we used to call it turnaround Tuesday, but I think it can have a wobbly Wednesday today.
Wobbly Wednesday, like it.
I do think the FOMC is going to spout something out or something's going to happen. I've got that tingling in
Yeah.
my
Maybe a little bit wishful thinking there, really, but
lower
possible.
region. Anyway,
Yeah.
I'll stop waffling. I'll show you what I'm looking at. Well, I won't stop waffling because I'm now going to waffle even more.
Oh, here we go.
Loads of waffling going on. Right there. Sorry, go back to that. That's the first chart. S&P.
Right.
S&P. This is a daily chart. 261.8% fib there. Nice little sort of break of the highs. We are at record highs. But if you're an Elliott wave enthusiast, I think you'd be very wary about. Obviously, the call today has got to be to buy dips, unless we get a decent sort of reversal candle. But I think Elliott wave enthusiasts quite like that. Shorter time frames aren't really giving much away. Is that a wedge formation where I think you'd have to squint a bit hard to find one? But I think if we get an intraday break of this trend, and if we put on the indicators, where is it? Indicators. If we put on the RSI, which is the relative strength index, you're starting to see a bit of divergence now. So it's peaked, and so I think there's a few warning signs. 261.8% fib. I've not looked at DMARC on there yet, but I will do later. And post it into the chat if I see anything. So I just think that's a little bit wobbly.
Wobbly.
And obviously, when we've had this massive move higher in stock indices, we've seen a massive move lower in the dollar. And yesterday, we mentioned these levels. We said, well, it looks pretty likely that it's going to break the lows. These are make up symmetrical patterns. So you've got 127.2 and a 161.8. We're sort of seeing a bit of divergence. So this was a previous swing low. It's oversold, blah, 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 blah. But again, are we going to consolidate around here until we get FOMC? So going back to the big boy charts, and just break down euro dollar a bit, that could potentially be an AB equals CD formation. Right, that's a weekly chart. The daily chart is the one that really caught my attention. You've got this 261.8% fib here at 119.75, and we're just pushing up towards that level. If you go to a 4-hour chart, and again, you've got to squint really hard to see anything, but if you put oscillators on here, again, going back to the RSI, we're starting to see a bit of divergence. So the chart's making higher highs, these oscillators are making lower highs, and it's not just that currency pair. Let's get rid of that. I hate that on there. It's not just that currency pair that's hitting some sort of decent resistance levels. That's an AB equals CD formation there, 133.14 ish for cable. But I thought this was quite interesting. The daily charts hit a 161.8% fib, virtually pit perfect. So when you look at our intraday calls today, we've got to be buying dips, but we've got to be buying dips, quite decent dips, if you know what I mean. We don't, we don't want to be sort of getting in at the start of the market, because I do think that that's got the potential to turn around. And dollar CAD is even more interesting than the other two, to be honest, for me. Weekly chart doesn't really give you too much. It's just breaking to new lows. But if we go to this chart, this is the 4-hour chart, and I'll just bring it in a bit. So it had a channel breakout. Then we've got this 261.8% fib here, 131.36, and it's looking oversold, and we have got a DMARC 13 on that one. So I just really wary going into FMC about the dollar at the moment, and I think we might make a symmetrical pattern, and we might turn around and push higher, but we're not going to find out until 7 o'clock tonight. So I think the intraday calls, like I was saying, are to sell into any sort of dollar strength, but it could be turnaround Wednesday. We'll wait and see.
Wobbly Wednesday, I thought it was.
Wobbly Wednesday. It could be wobbly Wednesday.
Right.
Yeah.
I'll have a quick pass through then on my chart, the morning reports in the folder, if you can find the folder. So, and then we give us a little bit to talk about, which hopefully doesn't bore people. Not that I'm going to go on about that much. Okay, so just seen DAX. We've just been triggering on the DAX short, 12,915, selling it there. As I said, we had this. We caught it quite nicely yesterday. We bought it in the morning, and we hit the target. It rallied through and carried on up. To 130.50, so our target was just below 130, and it's rejected that, formed this bearish engulfing on the 4-hour chart, so a little bit shaky there. Shooting star formation on the 4-hour chart on the FTSE as well. We're looking to sell a rally there. Doesn't look like we get it. If we get a break of 60.32, is it 60.32? No, it's not. 60.35, then we'll be looking for more negative downside there. CAC, I think, has broken, so I'm bearish on CAC. Again, it was ideally selling a rally at better risk reward, but if we get a break of this level this morning, 49.16 is the low. We're looking to sell a break on that. What level have we got? Looking for indices, CAC. We're looking to sell break. Oh no, we've gone for selling a rally 49.85. Sorry that it is here, but I think if we could break below 49.15, that will have been missed. The only one that looks half decent is SA40. We're looking to buy a dip. With the Dow, I think you're getting on the 4-hour chart, you're getting this flatlining moving across. Nothing.
Is that a descending triangle formation?
Oh, it could be, couldn't it?
I like to see bearish patterns.
Yeah, just looking for anything that starting with a B and doesn't rhyme with cull. You don't want to see that. So, but Nasdaq isn't any sort of bearish pattern in there at all. That's still tech stocks leading that higher. S&P new all-time high yesterday, but it's still hanging around this 3,400 level. Quite a psychological barrier there. I expect we've got to break that before we get a decent sell-off. Dollar still a bit under pressure. Nothing else really. So yeah, I don't know. I think I'm going to struggle again with a gun to head challenge today, because the only one I really fancy is the DAX. So I might. Shall I just jump in that, do the gun to the head, or do we have to talk about yesterday?
No, you can get, if you want, get on it, mate.
Trading at 12,800 and
don't really want to talk about yesterday.
No, we'll go over that. We both stopped out.
Yeah, that's enough.
Okay, that's enough to talk about.
-2.
Okay, and I'll have a 45 tick stop. Okay, so I'm getting short here. Stop is 12,937 above the high. Target is 12,757, which is very close to 50% retracement. Well, no, let's redraw this actual fib line, because what we're talking about is this being. Let's draw the fibs on this channel and see where we're looking for. Yeah, 50% retracement would be move down to 12,655. So if you look at it, possibly forming a bearish head and shoulders formation.
Again, you've got to squint really hard for this. Oh, it's not too bad actually.
No, it's not too bad, is it?
21, no.
So measured move target for that, if it does break below the neckline, that'll be confirmed. So if it breaks below 12,765, then the measured move target will be a move down to 12,475. So there's the potential, but that has to break the neckline to be confirmed. And I would say even taking a horizontal neckline would be a early entry, 12,791. So look at yesterday's low. If we break yesterday's low in DAX, I think this is the potential for a move back to the swing lows here, 12,500.
Yeah, normally an impulse move as well, isn't it? That breaking that move. Okay, lovely. Good luck. What am I going to look at then? I just want to quickly go back to that Bitcoin. Not that we took a loser. We're quite grown up about it ish. I just wanted to show this morning. So this was what we talked about yesterday, which was the triangle breakout. Normally it will come back and it will retest the triangle, so it was close to the triangle support, the breakout support when we did the talking ball yesterday. But this is our bespoke indicator, and this is a previous swing high. So 116.90. As I was writing it this morning, it was at that level, so we got long at the market. So what I'm trying to say is, even though sometimes the technical indicators or technical levels look like they should hold currency pairs and commodities, etc., we prefer to look at our bespoke support and resistance levels, because it gets us in at better levels normally, and as such we get a better risk reward. That's me waffle. I'm going to go dollar, so I'm just going to get along with this because I like it. Look it. If I put a stop below, I'll target up there because it's FOMC. So getting long the dollar at 92.31, targeting 93.90, and I'll have that looks reasonable, 30 tick stop. So I'm getting long of the dollar index 92.31. I've got to stop at 92.01, and I'm going for a swing high at 93.90, which gives 5.3R. FOMC.
Brilliant. So, did you manage to get the report up? Is there any sort of summary of yesterday, just the headlines?
Well, not really, just saying the dollar hit 27-month lows, and hence euro dollar hit 27-month highs. Risk appetite was quite steady. Overnight we've seen the S&P 500 hit record highs. Sterling hit 7 months highs, so lots of highs and lows. And normally when we get these extremes, we do get at least a correction. And it's saying that Bitcoin stumbled, blah, 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 blah. Loads of sterling figures out this morning. Quite a mixed bag, really. Better than expected retail price index, inflationary figures. So the inflationary figures, CPI, PPI, were better than expected. And sterling's gone nowhere, really. Today we have got, I think we're just going to be wait and see mode until FOMC, but we have got US durable goods at 130. Used to be quite a market moving economic release, and then we've got oil inventories at 330, and then we've got Fed at 7 o'clock. And I will be watching this one actually. I think it's going to be quite interesting if I can stay awake that long.
Yeah, exactly.
And we've got BOC as well, Bank of Canada inflationary figures as well. Consumer price index at 130.
Lovely.
All right.
Excellent.
That'll do. Well, come back, Joe. All is forgiven.
Yes, exactly. He'll be back tomorrow, but he'll be locking down. He's got to do 2 weeks solitary confinement. Yeah.
Mind you, with his missus, that's not a bad thing.
No, but it will be driving him mad, because you know what he's like with his athletics and
has to run around the back garden, doesn't he? Yeah.
Yeah. If you're allowed, I don't know if you're allowed to run around the back garden.
Yeah.
But we'll see. We'll find out. But yeah, have a good day, everyone. I hope the markets are kind to you.
Indeed. Enjoy.
Cheers, pal.
See you, mate. Bye.
Yeah, mate. Bye.